Good morning and welcome to Purpose Driven Finances, where our focus is helping you use your finances to achieve the purpose and plan for your life. And now here's the host of Purpose Driven Finances, Alan Molina with Serwus Capital Management.
Hey, good morning. This is Alan Molina, your host, Purpose Driven Finances, president of Serwus Capital Management. Hope you're having a great day out there. Aren't you glad for the cool weather? It's an amazing thing. You know, lows in the 60s. What the heck? I'm so enjoying it, aren't you?
I am enjoying this little respite because you know it'll get hot again, but we've had the rain and the cool weather, and I'll take it.
Exactly. and Mary, I get to do one of those things I joyfully get to do is mow my grass. I'd rather have grass to mow than not have grass.
And you enjoy mowing it?
In theory. I get to read
like
books.
The idea of
I get to
mowing
read
the
books.
Grass. Okay.
And let me tell you a little secret.
Okay.
About mowing grass. If your son, not the one who's present helping us, but if your son happens to go through tolls and doesn't pay them, then you have to pay them, then you can negotiate either give me the cash or mow the grass. And so I have negotiated. I paid them, and he's going to mow the grass. So it works out really good.
Is that is present company?
No,
excluded?
It's not
okay,
him.
Okay.
It's not him.
That is a good. It's funny how that works.
It
funny
is.
How that
so
works.
It works
Yeah.
as a little thing. So folks sitting here with my co-host Mary, and thank you for being here again. But folks, I'm excited about today's. All kinds of different words went through my brain that don't apply to talk radio. So today what we're talking about is what to do before and after you buy an investment. Now, let's just chat, Mary, about investments. It's not on the list, but I was thinking let's bring it home. Of people that you've talked to or heard about in your totality of life, 29 years. That being said, what are some of the strangest investments you've heard about? Or things that you were like, what in the world?
Oh gosh.
See, I even put them on the spot, so.
I don't know. I'm trying to think of some really weird. No, I can't really think of any.
Okay.
I know that my husband was kind of on the SpaceX bandwagon.
Well, you can tell him you need to listen to this show.
Well, the good thing is I listened to this show because I'm on the show, and I was able to pass along what you had been saying.
Oh, yeah, and we're going to talk about SpaceX
and
in a
are.
moment.
Yes.
Well, I got hit by a dump truck several years ago. And why are you laughing, Mary?
Because when you just spring it like that, it's just so bizarre out of the blue.
You got hit by a dump truck?
And you did.
Right,
yeah.
I did. That being said, when I was recovering from cervical fusion up at Johns Hopkins, I went to the, what's that store? The gift store, and they were selling Beanie Babies. Mm-hmm. I bought some Beanie Babies as a collection.
Yes.
The problem is when you're taking 120 milligrams of morphine a day, you forget that you got to sell them. and I bought, I can turn this $7 thing into $50.
Well,
I forgot to sell.
You forgot to sell. So I've heard about that. Investments as in little things you, not a company or something, but you buy Beanie Babies, you buy Star Wars figurines, you never take them out of the box. You buy Cabbage Patch dolls, you never take them out of the box. Yeah, you buy things and you never take them out of the box. And then all of a sudden you find them in your closet. And
they're worthless.
Yeah.
Yeah. The key there, and the reason I'm bringing it up because it totally applies. Mm-hmm. The reason it applies is a lot of times people have why they're going to buy it, but they never, ever, ever have a reason why they're going to sell their investment. They buy something and they're like, I don't want to sell it because of taxes. I don't want to sell it because of this or that. Now, Mary, I feel bad. I'm always putting you on the spot. So you're my guinea pig. I apologize.
It's okay. Just don't ask me to do math, Alan.
Right.
Found that out the hard way last week.
What happens if you buy something and you never sell it? What does it become?
I don't know.
It's a collection.
A collection. Okay, yeah.
And think about the things.
So it's not an investment.
It's not
a
an investment.
collection.
It's a collection.
Okay.
Because a collection is something that you get emotionally attached to. Now, we're not in Utah. We're not collecting wives or husbands. I've never seen you speechless.
I like that laugh that you have when it's just kind of like it's a belly laugh.
Yeah. I got it from my grandma. But that being said, what ends up happening is if you buy something and you never have a process to figure out when to sell it, all it is a collection.
Mm-hmm.
And some people have a $5 million collection and it's sitting in a Roth or a traditional IRA or a 401k, and they have no idea how to use it. Eventually, one of my clients, smart guy, and he and I were meeting the other day, and he says, Alan, I have lived my entire employment career of being a saver, a super saver. And I would like you to do a show or a series of shows of going from being a super saver to a spender. We don't want to be a super spender unless you have super spender bucks. But he's having a difficulty. And so we're going to eventually talk about that after we get over the portfolio management series. But what I wanted to do, and the reason I had that intro, and it may have been longer than some folks liked, but what I wanted to talk about is SpaceX specifically. Mm-hmm. Because we both know that you weren't on the show. We had the opportunity to have Biscuit, and I believe it was June 20th, and he brought up, should we buy it? And I brought up some things. And what I said, I told listeners not to rush in. And I didn't say it wasn't because it was a poor company, but really I thought it was too high priced. And because there were so many funding levels before it went IPO. And so during that time, what ended up happening was Anthony and I discussed it, and we were looking at it because I believe it IPO'd at 135, but it came out at 150. And then from there, it went all the way up to 210. And I'm taping the show on Friday, folks. So around the time that I was taping, or right before it, I believe it was about 111, somewhere in that range. That's a big difference. Big difference. Mm-hmm. Now, Mary, you may know all of this. The listeners may know all this, but I'm going to try to be elementary. When a company decides to raise funds, what they do is they go through rounds of raising money. It's, they start really low, then they start going up. Mm-hmm. Mid 2023, SpaceX, they were offering it at $16 a share. It was valued at $150 billion. Late 23, it was $19 a share, $180 billion. At $19 to $111, I'll take that. Mm-hmm. Then mid 24 was $22 per share. July 25, it was $42 a share, valued at $400 billion. December of 25, $84 a share, $800 billion. June 2026, 2026, the IPO was $135 a share. So my question is, from December 25th, it was valued at $800 billion, to June 26th, it was valued at $1.75 trillion. My question is, did the price move much faster than the underlying? Did the business really change? And that's a rhetorical question. And my guess and my estimation and my looking at it is the answer is no. So what really caused that valuation to go up? Have you ever heard the phrase, hope is not a risk management process? Or hope is not an investment process?
Mm-hmm. Okay.
You've heard that
I get
or
the
know
idea,
that?
yeah,
you get the idea. So going from valued at $800 billion to $1.75 trillion is really based upon hope. Because realistically, the reason it was valued is because it went to retail investors. I don't care if you have $30 million, you're a retail investor. You know who's not a retail investor? BlackRock, Google. I think Google came out and said that they had with that and what they put into, I think, the ChatGPT investment and SpaceX, they've made $100 billion. That's not a retail investor, because when you're talking a valuation of $1.75 trillion, great, and I appreciate, and I'm not disparaging that you've worked hard and you've saved $30 million. But realistically, you're not going to invest $1 million in it. But even $1 million is still classified really as retail money. And so the reason it went so high is because of the hope and the excitement. Man, going to Mars, going to the moon. I want to be in that. Mm-hmm. And the hope. And I'm going to take a break because I've talked a lot. Any questions for me? Any thoughts?
Well, I guess that'll be the what's the future of SpaceX?
What's the future? Well,
Yeah.
I think the future is to the moon.
Yeah.
Yeah.
But I mean of the
stock price.
Yeah.
Right.
Yeah.
I was trying to be coy and
Yes,
funny. You didn't laugh. So that being said, realistically, a falling price. Let's analyze the price structure. The falling price is not automatically a bargain, because if you look at things that go down in value, just because I'm going to use some Wall Street terms, just because it's oversold doesn't mean it can't get more oversold. Doesn't mean that just because it's cheap doesn't mean it can't be cheaper. Okay? It's kind of like that filet mignon that Food Line puts out that no one buys. And it comes with that little yellow or red sticker that says best by use date, but we're going to reduce about 50%. Well, if you buy it today, it's 50% off. But if you buy it 2 days or 3 days from now, it can cause a doctor's visit. And so just because it's cheap doesn't mean it's not going to get cheaper. So right now it's approximately $111. The stock is about 18% below the IPO price of $135. But it's still 32% above the private price of December 2025. So to them, it's a good price. But can you imagine if you bought it at I'm just going back to my notes. If you bought it at $42 a share and it went up to $210, and you were like, man, I have 1,000 shares, and it's at 420,000. Now it's at 210. I'm worth from 420,000. No. Yeah, 42 times 1,000 is 42,000. What am I doing? My math? What the heck, man? And now it's worth 210,000. You're gonna make fun of me next week because I can't do the math. But that being said, the reason I'm getting into all this is just because it's gone down does not mean it's a bargain. And just because I think it's a great company. A lot of people don't like Elon Musk. A lot of people do. He isn't the smartest man that's ever lived. There'll be smarter men beyond him. There'll be smarter women. That being said, just because it's gone down from 210 to 111 doesn't mean it's not going to go down farther. My expectation is it's going to go down farther. I'm if you want to quote me on this, that's fine. I wouldn't doubt that at one point in time you'll be able to get it in the 80s. I could be wrong, totally wrong, but that's my guess.
Okay.
Is it bad to buy it here? Dip your toe in it if you really are comfortable. But, from there, I think it's a great company. I think it's going to do great things. But just be careful, because just because it's gotten cheap doesn't mean it's not going to get cheaper. Now, folks, we got so many things I could have talked about. And so, Mary, what we're going to do is we're going to talk about risk management. But not only that, how do you decide when to sell, how to sell, things such as that. So, folks, I didn't give you my phone number, 434-316-0246. If you would, give me a call, check out my website, and I look forward to hearing from you. Stick around. We'll have a 30-second break.
Hi, everyone. Brian Kilmeade here. Coming up on the next edition of the Brian Kilmeade Show, we'll have the biggest newsmakers, news breakers, and take a deep dive into news you care about. Whether it's breaking news, entertainment, politics, or sports, even pop culture, I'll bring you the latest developments with expert analysis from the big names you know and love. Plus, you never know who may stop by. That's all coming up on the next edition of The Brian Kilmeade Show.
Weekday mornings from 9 to noon on WLNI. And now, back to Purpose-Driven Finances. Here's Alan Molina with Serwus Capital Management.
Hey, good morning again. Alan Molina, host Purpose-Driven Finances, president of Serwus Capital Management. Hope you're having a great weekend, enjoying the cool weather. Now, Mary and I were talking about SpaceX, but also not what to buy, but when to buy, but also what do you do after you buy it? Now, Mary, you know, I'm not going to pretend I know anything about women's clothing, makeup, any of that.
That's okay. I don't know much about it either,
Oh,
be
come on.
honest.
You know a lot more about it than I do. You know a lot more about it than I do. But normally what I have seen from women is not only will they'll do a little bit of the research, but they'll ask their lady friends about it. Mm-hmm. They'll research it. Does this $400 product work as well as this $9 product? I don't know if you've heard of the company Elf.
Haven't.
I think it's Elf. Mm-hmm. But they sell high-end things. They're knockoffs, but they're supposed to be just as good. And so in that, what ends up happening is, now, ladies, do me a favor. Don't turn off the radio. Just call me and say, Alan, and correct me. And then give me a call. Let's meet and talk about your portfolio. You know, that's really what I want to do. But the reason I bring it up is women will do research about hair care, about who to get their nails, their clothing. You know, hey, I have a special event. Where do you go to get this evening dress or the dress for the wedding? Women talk. I mean, us guys talk, but it's more only about like tools. Hey, what chainsaw do you like better? That being said, what ends up happening is women and men both have a process. And when you buy an investment, there needs to be a process. Not only a process of why to buy it, why hold it, and why sell it. One of the key things that I try to do at Serwus is I don't begin with, do I like the company? What I begin with is, does it fit the current market and economic environment? Is capital already moving there? Is it in, compared to other investments, is it demonstrating leadership? Mary, you've heard about Iran and the little.
I have.
Right.
The little dust up.
Right. Mm-hmm. And you've seen that gas has gone up again. Mm-hmm. Oil's been a good place to buy. Who would have thought? But once the Iran conflict starts going back down, it's going to be a time to get out. So you have to look at those types of things. And then what happened is that investment realistically, does it have the permission in order to hold my capital? Because it's valuable. You know, when you invest money in your simple IRA, in your 401k, 403b, every dollar needs to be valued and purpose-driven, and the investment that you're going to use, has it done enough to earn your capital? And so that's what I do at Serwus, is we try to determine what earns the capital. And so the first thing I want to bring up is you got to know why you own it. What was the reason why you bought it? Mary, when I first got in the industry, there was a guy, and some of my friends know who this is, or in the industry know who this is, but I'm not going to mention their name. That person, mm-hmm. I'm not going to say who, male, female, anything, but that person was like, Alan, I got this employee at X company, and he said this company's going to do X, so I'm going to buy these shares. And I was like, in my head, I was like, isn't that insider trading, bro? And I'm like, I'm not going to do that because I don't look good in orange. I have orange Jeep, but I don't look good in orange. Mm-hmm. You know, that blaze orange, mm-hmm. and I don't look good in handcuffs. I don't feel good in handcuffs. And sometimes you have to wear those stripes, mm-hmm. And the problem with having stripes and you're tall, you look even taller. I don't look good in stripes. So I try to stay away from insider trading. So you try not, I'm going to suggest to you, don't be like Nancy Pelosi. Now, if you followed her stocks, you probably made a lot of money. But generally, most of us cannot do insider trading. So why do you own it? Because someone on CNBC said it was good? Someone on Fox Business? Did you read the report? Mary, I had a client. The reason I say had is he passed away. Great guy. Mm-hmm. And but he managed his portfolio in the 70s and 80s by the Lynchburg News in Advance. He did all right. Mm-hmm. You know, he did all right.
Yeah.
I'm not going to share some of the things he bought because they were really funny. But that's how he managed it. And by the time I helped him out, the Lynchburg News in Advance was a little old to manage money with because it was like really stale information. But you got to know why you own it. And then the next thing is, how are you going to monitor that investment? Why should you continuously own that investment? Now, a lot of times people will read a story or hear something, and I have some clients that use individual stocks, Mary, and you ever met those people that they could sneeze and they make $100? You know what I'm saying? They're just gifted and talented at making money. You ever met those kind of people?
Yeah.
And I'm like, bro, can you like rub off some on me a little bit? Because some people are like, they just get all the deals. It's just utterly amazing. Anything they touch, it turns to gold. And and I have some clients that do that. They've built businesses. They're worth a great deal. They've picked their own stocks, and they've done a great job. But most of us aren't like that. You know what I'm saying? Mm-hmm. And so the thing that what you need to do is when you buy an investment is you have to choose, is it an investment to help you achieve the purpose and plan for your life, or is it a collection? Now, remember, a collection is just something that you have to dust every so often. And I don't mind having to dust a big briefcase full of cash. I wouldn't mind doing that. But I don't. My wife, you ever heard of Precious Moments?
Yeah, I think I have.
Yeah, they're little figurines.
Yeah.
At one time, those were hot collectible and longer burger baskets.
Yeah.
You know, Pampered Chef really wasn't a collectible, but some people I guess did. That being said, monitor the environment. What I mean by the environment is the economy growing? What's happening with inflation, interest rates, market direction? I know, Mary, you've heard of the U.S. dollar. I didn't want to ask a dumb question.
I have.
Have you ever heard of the U.S. dollar? No, Alan. I trade my account is in total pesos.
It sounds like you're kind of comparing this to a farmer who has a certain crop, but just because it's a good crop one season doesn't mean he's going to do this, plant it again next season because conditions change.
Exactly. And that thank you for bringing me back on track. Is the issue that we have is we think we buy X, not SpaceX, but just X as a variable, and we think that X is going to continuously performing at the same exact rate. If you look at semiconductors in memory, the past 2 months, they've been beat like a rented mule, Mary. I'm talking some of them are down 20 and 30%.
Why is that?
Because of the AI bubble.
Okay, yeah.
Partly, I think realistically it's because we're in a quad 3 and 4. Because those types of things happen.
Yeah.
But then the other thing to happen that you need to do is you need to watch leadership and see where capital is moving, seeing where leadership changes. Because one of the hottest places right now to be is commodities. And what I mean by commodities is oil or energy related, but also to be in utilities, to be in, safer places. Some healthcare is ripping. And so if you hold an investment and the goal is 30 years from now, some areas it's not going to go well. But the goal is, if you're going to buy and hold, then what you're going to have to do is you're going to have to significantly diversify and make sure your portfolio is not dramatically affected by any one stock. And we'll get into that in a moment. Because you got to remember that yesterday's strongest investment is probably going to slow down. It's going to lose strength. It's going to be overtaken by another area. Or it's going to stop responding positively. You know, Walmart used to be a growth stock. Then it hit a period of slow growth. Then it's gotten a little stronger. You have to understand that just because you own it doesn't mean that it's going to operate the same way forever. So I know now, folks. I know this is this is not riveting. This is not like Argentina and Spain, although to me it was. I didn't watch one. What's it called? What was that thing called?
The World Cup.
The World Cup.
You didn't watch any of the World Cup?
I didn't watch it.
Okay.
I tried not to.
Mm-hmm.
I love people who play soccer, and I love people who watch soccer. I love people who like soccer. I don't. So, I'm
each his own.
I'm an American football kind of guy.
Yeah.
Football.
Yep.
I'm going to Steeler training camp next weekend.
Are you really?
Oh yeah. Get some pictures. I'll share them on the radio.
Okay. Yes, please do. We'll show them. I'll show them next time.
Right.
Mm-hmm.
Right. So that being said, the reason I'm getting into this is because I'm trying to encourage you that just because you have a portfolio and it's performed the way it has over the past 5 years doesn't mean the next 5 years are going to be the exact same. That your portfolio needs to have a process that is dependable, repeatable, executable, but also measurable. And that being said, going from there, my suggestion is when you diversify your portfolio, if you're going to do individual stocks, I would do 1 or 2% in each stock in your portfolio. Because the problem is, Mary, there's been times when, like the crypto, I think it was 2022, I don't remember, 24, I don't know, sometime in the past 4 years, crypto really tanked. And you know what happens it happened in 2007, 8, 9. You know what happens during that time? Suicides go up. Heart attacks go up. And it's all because people put too much of their money into one stock or a basket of stocks. And a friend of mine says risk happens often all at once. And so you don't want to be the last guy trying to get out of or the last gal trying to get out of the burning building. Mm-hmm. So really what I'm trying to do is you need to have a process. And that's really at Cerusse Capital Management. What I have tried to do is develop a process, not only for the QPM, not only for the dynamic asset allocation, but for every step that we do, even financial planning and other areas of portfolio management, is trying to design a robust process to help you meet your goals and your dreams. Any question? I know we got a minute left. And I should probably have given you more time to talk.
We should use SpaceX then as a valuable lesson, right?
Exactly.
What happens when you get really excited about a situation?
Exactly. And so what happens is when you get really excited about something, you buy too much of it. You're not dating here. You're not getting married to SpaceX. Don't get emotionally drawn into SpaceX or anything, whether it's NVIDIA, whether it's DRAM, that's an ETF, whether it's Eli Lilly. Just because they come out with the next best drug doesn't mean you fall in love with it. You're not going to marry her. You're not going to marry him. It's an investment to help you enjoy life. So, folks, give me a call, 434-316-0246. Go to my website, servuscm.com, and I want to help you. I want to help you achieve the purpose and plan for your life. Have a great weekend, and stay cool out there.
Returns for illustrative purpose. This is not a suggestion to buy, sell, or use a platform. Only will a suggestion occur after a meeting to determine goals, risk tolerance, and time horizons. Investments involve risks and no guarantee of future results.